Robschild. Nothing I say is investment advice. Welcome to the show where we view financial markets through crystal ball gazing. J.P. Morgan once said, millionaires don't need astrologers, but billionaires do, and so we begin. Today is Tuesday, July 2nd, 2024. In today's episode, I just wanted to mention tomorrow's a half day. Wednesday is a half trading day, so not a full day. We're expecting pretty light volume. Not a lot of professionals are going to be trading that day. You know, we're getting ready for the national holiday of July 4th on Thursday. Markets are closed. Now, today, interestingly, Powell spoke at, I believe it's the ECB meeting. We also heard from the Fed chair of Brazil, which I was very excited to hear about. I have a lot of Brazilian equity exposure myself. I think it's a very undervalued market that needs to normalize. I mean, once the markets wake up, that's how I see it. If you've been watching my show, you know how I've been talking about that. I wanted to note that, I watched the whole thing, Powell talking today, and I just wanted to mention, I heard a slip of the tongue, I believe, when he mentioned jobs. I think he gave away the jobs report for Friday. I didn't hear anybody else talking about this, but I believe he said that it was cooling, that it was like going the direction that they wanted to go. I don't have the exact quote or the clip. I was shocked at what I heard in the middle of his speech. You can watch it yourself if you want, if you like. One other very interesting thing he brought up was something called the Beverage curve, and I want to bring that up. This is a really cool chart. You can find it on bls.gov. If you just Google the name of this, the Beverage curve. It has nothing to do with beverages. I thought that maybe it had something to do with actual beverages, but it has to do with job openings versus the unemployment rate. And so the unemployment rate, the further the dots go to the right, the higher unemployment is. So over here is bad times over here on this side of the chart, right? And then job openings, though, on the left side. And so ideally, you want your job openings to be moderate. You don't want them too high or too low, and you want to be on this end of the curve, of the employment rate. Like this over here is perfectly fine. This is the green zone where everything's good. It's things are bad over here, and you can click on each one just so you can unselect all of the ones from before. This is the current one starting from May 2020, where we had the unemployment rate very high, and also the job openings were very low. And so when you have that combination, that's pretty bad. And so the goal is to move this way, and we did move that way, and then all of a sudden job openings spiked while unemployment continued to decline. And then we went a completely different direction starting around March 2022, where job openings started declining, and the unemployment rate has stayed within this range. Now, if you look at the unemployment rate by itself, as you've seen on this show, and you can find it on the Fred database, I've noted that we're inching towards going back towards the this area. But right now, we've just been going straight down, and the question is like, okay, is this going to keep going down? We're going to stay in this green area, or are we going to start heading back to higher unemployment rate, along with job openings going down? And I think that possibility, I think that's what they're aiming for. I think that's what the Fed, that's the whole point of keeping rates restrictive, so we don't have inflation getting out of control. The idea is pretty simple. It's unfortunately trying to make people struggle, so that people spend less money, so that inflation stops having the risk of continuing to go up. We're trying to fight inflation right now. He was pretty clear about that in the speech, and they're holding rates steady. He's like, nope, we're going to do it. And yeah, I don't think he's going to cut early. I don't think it's going to happen. It was mentioned many times in his speech today, and the interviewer was great. She was amazing. She asked all the right questions. But one of the attitudes coming from him was just very clear to me that it's like, we're going to beat inflation. That's pretty much all Powell cares about. And, you know, we're going to beat inflation until something else goes wrong. If unemployment starts spiking, then yes, they'll start cutting, but they have to see unemployment start to spike before they're going to cut. I think that's the biggest takeaway from everything with that meeting today. Anyway, to see other periods, March 2020 to April 2020, for example, well, that's not a very good, that's only 2 dots. Let's do 2009 to 2020. Obviously, 2009 unemployment rate was high and job openings were low, and then, you know, things got better. We headed towards lower unemployment, more job openings. That was a good period. 2007 to 2009. I guess we started here in 2000. Where's 2007? December. Is that in the middle of this somewhere? No, I don't know. I don't see where that is. But anyway, January 2008, you know, we went from a lot of job openings and very low unemployment to getting very high unemployment. So it's pretty cool to see these different periods and the trajectories that they have taken. And if you put all of them together, it's interesting. This black line is the one that we've been at most recently. As you can see, the rest of this chart generally stays in this area down here. So it'll be interesting to see how this all plays out. Another view of it, I just put it on paint here. You know, if I'm going to be using my crystal ball and trying to predict where I think this might be headed, you know, from we're here right now. I mean, we've been going down this way, and the Fed's still restrictive, and so my idea here is that as long as inflation still remains sticky, we're going to keep going down until we inevitably, you know, go higher on the unemployment rate. You know, at least getting, you know, to 5-6%, and then before the Fed, you know, pretty much has to say, even if inflation's high, that, you know, we're going to have to do some cuts. But we'll see how this all plays out. A headline you may have seen, at least on Yahoo Finance, S&P 500 closed above 500, you know, 5,500 for the first time. Yeah, it did. And I write yawn here because, you know, if you're going to be using anything on a technical basis, I just want to point out a glaring problem with this green candle. It does look bullish, but we didn't even go intraday above last Friday's candle wick. And from a technical standpoint, that's not bullish. This is not a bullish candle. If anything, you know, we could, not until we go above this line and close above the top of this very, very large wick here. And I don't expect that to happen, but we'll see. Data dropped today was the May JOLTS job openings, as you could see on the Beverage chart there. So it was, the last reading of this was 1.8 million. Expected was down at 7.9, and instead we're at 8.1. You know, the JOLTS report isn't as important to me. It is important, you know, and as you saw on the Beverage curve, it has been going down and down and down, and luckily we stopped for a second, you know. Oh, where will we go from here? We'll see. Trend's your friend till the end. But the unemployment report, like I keep talking about, is the really big one. It comes out Friday. The last and the expected are set to be at 4%. We'll see what happens with that. When I take a look into my crystal ball after listening to Powell, and I swear he had a slip of the tongue regarding the jobs report, I think it's going to be higher than what the market expected. It's just a matter of how much higher. That's what I see. Moving on to some of the charts and data, fear and greed, perfectly neutral. You know, again, we're headed into the unemployment reports on Friday, and like no trading tomorrow or the next day. So yes, we should be neutral. Good job, market. I'll also mention that, like, if you just looked at the S&P 500 without knowing anything else that's going on, we're at a closing all-time high. It's insane. We shouldn't be there, but we are. Moving on to the VIX, this is how options contracts are priced. The higher this goes, the more volatility there is, the more chance there is for collapse, for crash in the stock market. This is at like historic lows as far as I'm concerned, and we've just hit kind of a sideways trend line right here. So notably, I wanted to point out too, it's starting to look like quite a wedge coiling up here. And as you might know about wedge patterns, the tighter things coil up, the bigger the breakout tends to be. We saw this in a lot of charts are showing the same thing, just like tightening. Even some markets that have been falling have been going sideways. So the market is really in like what's going to happen next mode. I mentioned yesterday TLT, well, past 2 days, I was surprised to see this falling off a cliff. I guess it's fear of fiscal spending more than anything. I thought it was over on last Friday. Instead, we had another day down yesterday, and then today we went up from it. I did say, my expectation is to stay above this line and coil up until something else happens. If unemployment drops significantly, this will also drop significantly, in my opinion. But if unemployment is as expected or higher, I would expect TLT to benefit from that in price. Another view of this, basically the same chart upside down as the 30-year Treasury yield. Very notably, they have a very clear trend line here, and we'll see again where we go from here. As you may know, I am still over 50% exposed to long duration treasuries, so these charts matter to me personally quite a bit. Overall, I like to see myself as investor number one, market analyst, I guess, number two, and then trader number three. So I like to dabble in all three areas and try to use them with each other. But yeah, so I mean, if the 30-year yield starts really breaking higher, I might have to exit all of my treasury positions, maybe at a loss if this gets out of control. I'm really not sure. I'm going to have to figure that out. I mean, I can't see yields on the long end of the curve going much higher. 4.7% on a 30-year treasury bond, while dividend yields and PE ratios are so high, while the Fed's tightening, while unemployment's going up, while job openings are going down. It's like it would make a lot of sense for long duration yields to go down here. Wood is the next chart. I've been mentioning how for a while now this pattern here, double top, and I said, I noticed we were consolidating here, and I said if we were to break below this line that it would be pretty bearish, that we would head lower, and we have been doing that. So this is one leading indicator that can show markets where to go. Similarly, I'm not going to bring up the chart, but SMH, the housing, there's a wedge that broke out to the downside. That's looking pretty bearish. Moving on, last three things. So I just wanted to bring up Bitcoin, not for any other reason than comparing it to Bitcoin miners and the Bitcoin industry. So this chart is of Bitcoin, and as you can tell, this does not look like it's just going up and up and up. This current view of the chart starts in February 2024 to today. It's a daily chart, and we've been mostly going down, and yet we have the miners for some reason getting a bid here, going up. Ever since really 2023, the bottom in 2023, we're going higher here. So, this is a divergence that I think is going to go one way or the other. Either Bitcoin needs to go up, or the miners need to go down. You can't have this happen forever. You can't have the value of the thing that these companies produce going down while the value of the companies are going up. It doesn't make sense. Last chart, I bring up the Qs. Notably, we did not close above the tail similarly to the NASDAQ, S&P 500. We didn't close above this wick. That combined, if you watch Garrett Soloway's show, there's a major trend line that we're bumping our heads up against. And I actually took a short on the triple Qs. I don't actually short, I just go long on SQQQ. It's a triple leveraged fund going against the Qs. I've been successful with it before, and I'm in it to win it. So there you go. So that's all I have for today's show. Hope you enjoyed. Thank you for watching. I don't know when I will be doing another video. I will at least be doing some typing things probably for Friday. And then, yeah, I don't know what's going to be happening next week. I'll try to keep you posted. Thank you for watching, and see you whenever I see you next. Robschild.